With emerging markets in turmoil and China slowing down, investors are turning their attention to India, widely seen as the last standing brick. But can India's finance minister deliver in the upcoming budget? Don't miss our global coverage of India's budget, only on CNBC TV 18.
IRB Budget 2016. Now or never on 29th February, only on CNBC TV 18.
Let me also then move to agriculture and link what we've just spoken of to agriculture as well. And the agri-distress perhaps has not been acknowledged or appropriately addressed by the government, and there seems to be wide criticism of the way that the government has handled the situation. Yes, there's been 2 successive failures on the monsoon front, but things like the MSP regime, the procurement regime, the last survey talked about a national market. You continue to talk about a national market in this survey as well. Would you acknowledge today that the distress in the agriculture sector has not been appropriately addressed?
No, not at all. I think, there was a major crop insurance program.
Which has just been announced.
Yeah, this was, it takes...
literally a month ago.
Well, it's been in the works for a long time, and I think, I think this is a very important, because after all, when you talk about stress in the farm sector, which is very real, there's no question, and the government takes that very seriously. I think that we have to work on one side to improve productivity, but on the other side to cushion farmers against the downside risk. And I think the crop insurance program is a very good example. True, we need to do much more, absolutely.
What would you like to see the government address? Because I understand that this is going to be an issue where both by way of allocation of resources as well as attention, this is going to be the #1 priority area for the budget.
Yeah, I think budget is going to be looking at this. I think addressing farmer welfare, the agriculture and rural sector is going to be a very high priority. I think not just in terms of more resources, which of course are very important, but also in terms of what kinds of interventions and other policy changes. For example, the targeting of pulses as a big on a kind of major mission mode. I think that's also very. I don't know what you think about agriculture. I don't know. Is this in terms of what actions we're taking?
I think irrigation is one area we have to expand more.
Exactly.
And there is focus on that, definitely.
Yeah,
so
that's what the last budget had also sort of taken forward with the Sinchai Yojana and so on and so forth.
And of course, and remember, there's the Pradhan Mantri Gram Sadak Yojana, very important. I think we're going to see action there as well. NREGA, which is acts like a social security net, that's also very important. How to rejig it so that it also leads to a lot of asset creation. So these are all going to be very high priority items.
Okay, let me then ask you about one of the concerns that the market is talking about at this point in time, is that given the fiscal constraints as well as the fiscal headwinds, the fact that you actually have the 7th Pay Commission to deal with, you perhaps, it's a smaller amount in comparison, but you also have the OROP to deal with. We are going to see a deterioration in the revenue expenditure capital expenditure ratio this year, and that could then further impact domestic demand and growth.
That's an assumption you make.
No, I said this is a fear. This is a fear in the market.
No, I think that one of the something we document in the survey. I think this needs to be emphasized. One of the big successes of 2050, the year, fiscal successes, was a very welcome reorienting of expenditure away
to capital expenditure,
away from revenue, and that's going to continue. There's no question about that. The quality of expenditures is going to continue improving, with the share going to capital expenditure rising relative to this. So that's, I think, improving the quality of expenditure. And in fact, we've reaped the benefits of this. This year, public investment has, been one of the engines of growth in the economy, and that's something that, railways, roads, there have been, now rural roads, irrigation. These are kind of propping up the economy, and the government intends to, maintain improvements in the quality of expenditure.
Okay, that's good to hear, and the market is going to be looking at those numbers very, very carefully. But let me also ask you about another challenge that the survey talks about, and perhaps you're the only one within government that seems to be talking about this, and this is what's happening as far as the trade agreements are concerned, and the sense that India's largely being left out of a lot of these multilateral agreements and trade agreements that are being inked at this point in time. I think it's the World Bank survey that you quote on the implications of the TPP as far as member countries are concerned and how that could impact their GDP positively by anywhere between some 1 to 4% or even higher perhaps, and perhaps not the similar, but a negative impact for countries that are outside of the TPP. Do you believe that this is again an area that the government now needs to focus much more on? Trade needs to become a focus area, a priority area for the government?
Yeah, I think that, you know, the world is changing dramatically in terms of these trading arrangements. I think this Trans-Pacific Partnership is really a seismic development, you know, because big countries are getting together and forming trade blocs. And there's the TPP, but there's also likely the European-American Partnership, the TTIP. And, you know, at the moment China is out of it, but China wants to be part of TPP. It's a matter of time, not if. If that's the case, then, and if we get left out, I think it has implications for
the US has said India doesn't seem to be interested to come on board for the TPP. Should we? No, should we not engage?
I think that's unfair. I think that within government there's, you know, a lot of awareness of what the implications are. I think now there's a real effort to study, you know, because remember, one thing is that these agreements are not costless for us to joining them. You know, if the intellectual property standards are very high, I mean, it's you know, we cannot afford to not provide cheap drugs to India, you know, and anything that comes in the way of that, you know, is something that's, I think, almost prohibitively costly for Indians. So we have to do a very careful cost-benefit analysis. But I think the broader point is that we have become big enough to be able to engage much more positively and constructively in all these international negotiations. You know, we have a big market. Let's leverage that, and I think...
Why aren't we doing it?
I think it's happening, and there's very strong awareness of that within government.
You know, let me also ask you about your outlook as far as exports are concerned. I mean, forget the global downturn, but what we need to do at this point in time to mitigate our risk. I mean, we're down for the 14th straight month, and it's across the board as far as our export sector is concerned. You also in the survey highlight the challenge of a readjustment of currencies within the Asia region. How do you see the export situation panning out from here on, given that?
See, I think one point I want to flag about exports is that a lot of the focus has been on the decline in manufacturing exports. But I think we also need
services.
We need to take notice of services as well. That's something that I think we should not neglect. But I think the outlook is going to be not very bright, because the international economy, you know, is so uncertain. As we say early on, I mean, rarely in the last 25, 30 years do we get the sense of so many troubled spots around the world, either troubled or weak spots around the world, you know, whether it's Asia, whether it's Brazil, whether it's Saudi Arabia, whether it's Japan, the advanced markets, Europe, banks, you know, everywhere. And India seems to stand out as a, you know, as what we call a haven of stability and an outpost of opportunity. And I think that, so from that point of view, the external environment is going to be difficult, and we need to factor that in. I mean, we cannot, you know, say, be complacent and say our exports are going to boom, because, you know, the demand just isn't going to be there for that.
So where does that leave us in terms of currency, and specifically in the context of what you talk about, the readjustment of currencies that we're likely to see?
So I think we need to do what we need to do, and I think we need to, our policies need to then focus a lot more on, you know, the domestic market as a source of demand going forward.
So the rupee where it is, I mean, I know the stated position of the government is that we only intervene in the market to curb volatility, but, you know...
I mean, you know, rupee policy is something, you know, the level you should ask Raghu that question, you know.
Another question that we'll have to ask him is that if the government delivers on its promise of 3.5%, is the Reserve Bank going to then move on rate cuts? Do you believe that the possibility of a rate cut right after the budget, if you deliver on the 3.5%, is right?
This is completely, you know, speculation on
everyone's part. And, you know, that's what we can do 48 hours before.
I think that, you know, we have some views on the inflation projection, you know, and all of that, and all government policy will determine what happens on interest rates and stuff. So I think we're all working together.
The other Arvind in government, Arvind Panagaria, says that if the government delivers on 3.5%, and given the inflation outlook, the Reserve Bank should at least deliver with a 50 basis point rate cut.
I mean, people are entitled to their views.
No, but do you believe that there is room for at least 25?
I think we make it clear based on our analysis that there is scope for easing. And I think that it's important, there are 2 points that are worth emphasizing here. That I think we've done some very careful analysis to show that, the last interest rate cut was not passed through into bank rates.
Sure.
And I think part of the reason is that liquidity policy has been very tight. And I think that needs to be eased. And then there's a question of, should policy rates be cut going forward? And I think we say that there is space for easing. Putting numbers, I think the RBI is much more,
core inflation is within the range.
Yeah, core inflation is within the range, yeah.
More or less.
So there is room, you believe?
Whatever inflation we have, it is mainly in the food group, sir.
Yeah. So let me end then by asking you, given the state of the economy today, we're calling it the now or never budget on CNBC TV 18, and even in the course of the survey, you do seem to suggest that we don't have the luxury of time, and we need to act, at least as far as stimulating domestic demand is concerned. The 3 priorities that you would like the government to act on.
I think, I always...
I'm not even saying the 3 things that the budget will do. I said the 3 priorities that the government should act on.
I think we've spelled them out. I think the macro management, I think, taking everything into account, the twin balance sheet challenge, and the structural reform agenda is always there to be done, very much hoping that, that the GST, which has proved elusive so far, can go through, and the JAN agenda continues. So I think there's a lot there that is there to work with, and so the promise of India is still there.
The promise of India is still there. We need to ensure that we deliver on that promise and actually maximize the potential, because it's absolutely clear that we are sub-potential at this point in time, but we need to capitalize on that. Arvind Subramaniam, Mrs. Sachdev, Mr. Negi, appreciate you joining us here on CNBC TV 18. Let's see how much of what you have prescribed in the economic survey will find its way into the budget this year or the next year, but appreciate your time here on CNBC TV 18. With that, from all of us here, goodbye. Thanks very much for watching.